What's going on, everyone? My name is D. Anthony, and we are going to talk about something that I keep coming across on social media. I think it needs to be addressed, right? If you want to save your trading career, right? Because that's exactly what this is. This is a career. This is not a hobby. This is not gambling. This is not, something that you just do for fun. Regardless whether you trade full-time, you trade part-time, you trade once a month, you trade 100 times a month, right? What we are going to talk about today needs to be addressed, and the reason it needs to be addressed is because I see it on social media all the time. Now, you kind of have a bunch of different groups when it comes to the trading space for retail traders. You've got the Reddit traders, the people that, are going to just do outlandish things. Not to say that they don't have some good DD and technical analysis people in there, but they're a little bit more all over the place, smaller cap stocks, a little bit more zero DTE type stuff, a little bit more short squeeze type stuff. And in that regard, then you have people on Twitter who, everyone on Twitter seems to win 100% of their trades. Every 18-year-old has an account over six figures. Every 21-year-old suddenly knows macroeconomics. And everyone on Twitter seems to have a call out that went 5,000%. Okay. Then you have your YouTubers, which are going to be more your clickbait type of news headline, type of people, right? And then you have your regular retail traders that you never really hear about. They're not on social media. They kind of just do their thing. And so forth, right? But one thing that I see on Twitter, especially on Twitter, is everyone has emotions, and everyone, not to say that emotions are wrong, because I will be the first one to tell you, if you try to play this, do this business, right? And you try to trade professionally, as professional as you can as a retail trader, because at the end of the day, even though, yes, you're not a professional per se, that you work for some type of hedge fund or on Wall Street, anytime you're going to put money on the table, real hard assets on the table, you have to be a professional, right? You have to be a professional. So one thing that I'm going to say is that if you're going to be a professional retail trader, right? If you're going to manage your money and you're going to manage your risk, you have to leave your personal bias at the door, right? Because the stock market doesn't give a shit if you think that the market needs to go up or down. What you need to do is have a system, have good risk management, follow a plan, stay disciplined, do that on a day in and day out basis. I'll be the first real MFer to tell you that if you do not have a plan, you do not have a system, and you do not manage risk, and you want to constantly call tops and bottoms, you're going to get your ass destroyed. I don't care whether you run a Discord. I don't care whether you sell some multi-million-dollar sales course on the VWAP. I don't care if you're a big YouTuber with 5,000 or 5 million followers on YouTube. If you are spitting out information to other people, and you either are doing it for follows or doing it for money on the back end, or you're doing it for the sake of just doing it, right? Do not throw your personal bias out onto other people. Now, I'm not going to name names, and I'm not going to say who, but there's a lot of people, and I'll just go ahead and read one tweet, right? Someone said today, and this was, currently we're trading at 10:30 in the morning. This was said about an hour and a half ago, 2 hours ago. They're feeling puts, right? Someone is feeling puts. I want the market to go down. And if you just start looking through the comments, everyone is kind of saying, please, market, go down. Why don't you just go down? When is the market going down? When is the SPY going down? When is the NASDAQ going down? Just go down. I don't buy this pop. I don't buy, this hype. I think that we're overextended. Who are you to say that the market is overextended or not overextended? Who are you to say that the market is oversold or not oversold? Why is it that our human psychology and our human mindset and our human, kind of behaviors gravitate towards the opposite of what is happening? Is that because you want to be right? Is that because you want to look like, some sort of, amazing rock star day trader? What is it, right? What is it? We need to really tap into the human mind, right? And all of us as traders need to tap into what's going on up here first before we expect to make any real money. If you do, okay, if you do, always try to call the top and always try to call the bottom. I'm not even saying that necessarily you're taking puts. For example, today, obviously today is the 13th of April. It's 10:30 in the morning. The S&P is up 1% and $3.75 on the day, currently trading at 411.85. Out of the gate, this has been an absolute cannon out of the gate, right? If we kind of look at the chart here, look at the pre-market highs sitting at 409.93. Let's just call it 410. First hour candle opens up. We have our opening range, does not take out the pre-market lows. It does not take out the pre-market highs. All we have to do is sit and wait. Why do we have to sit and wait? Is because the opening range hasn't been confirmed. The opening range has not been verified. We still do not know whether there is more buyers in the tape or more sellers in the tape. The market is still trying to figure itself out, okay? What's so hard about that? Follow technical analysis, have a strategy, have a system, understand potentially your supply and demand zones, where these stocks can be heading, where they could potentially be stopping. You want to understand those levels. So essentially the first 30 minutes off the open, we should have been sitting on our hands. The first 45 minutes, we should have been sitting on our hands. If we kind of look at the 7 a.m. candle, now this is going to be 30 minutes after the market opens. After the first 30 minutes, not only do we not take out the previous pre-market candles high and low, but we don't take out the original pre-market sessions low either. What we do is now confirm to the top side. Now, if you look at my chart and you kind of understand the way that I trade, I'm going to put so much nonsense and so much, crayon scribbling and so much supply and demand on my chart, it's going to make you vomit, right? So, a lot of people don't like the way that I trade. For me, it's worked. It's worked for over 5.5 years that I've been doing this, almost 6 years full time. I've been trading for 8 years now, going on 8 years, 8.5 years. It's worked for me for the past 5.5 years, okay? Whatever works for you, works for you. If you like to have a bare bones chart and you like to guess, you like to just look at the price action and kind of put your tops and lows in there and kind of guess where you think that the price action is going, be my guest. There's nothing wrong with it as long as you're making money. If you're losing more than you're making, that's when it becomes a problem, right? But for me, this works. It keeps things simple. I understand how to read the tape. I understand how to read my charts. I understand how to read the option flows. I understand that, if there's a pivot level that I'm looking to play, whether it's long or short, I know I can take advantage of that. Now, getting back to the chart here, the 7 a.m. candle, not only does it confirm pre-market highs, if you look at this chart, we don't have any resistance, which is supply, any resistance until we get up here to around 412.80, 413. Okay. Now I've seen a bunch of people saying, I think we can go to 413, maybe 412 before we kind of take a little bit of a back seat and cool off a little bit. I would agree with that. That kind of technical analysis sits well just based on what is going on the charts from a supply and demand point. But if we look at the market, the last 4 hours that the market has been open, we have not seen a downtick. We have not had a close below a previous hour's low. We have not even tested the 5-day moving average on a 1 hour time frame. Okay. If you know anything about technical analysis, your 5 SMA is going to be a power trending SMA. Your 9 EMA is going to be a power trending EMA. Your 8, right? I see some people using the 8, the 9, the 10, the 5. Those are all going to be what is called power trending moving averages. Okay, whether it's an EMA, an SMA, whatever you want to kind of follow, right? I'm not saying that any one is different than the other. Just for me, on my power trends, I like to use the 5. Now we have not even tested the 5-day moving average on a 1 hour time frame. We are actually riding the upper Bollinger Band all the way up today for 4 hours. Again, 4 hours. So why on God's green earth does someone say, I hope the market goes down? Why on God's green earth does someone want to short the market? Why on this beautiful planet is someone trying to make stocks go down because they feel like we should be going down? Does that make any psychological sense? When it doesn't make psychological sense, you have to second guess and question these people that are saying that. Is it because they want to look like some superstar hero and say, I told you we were oversold? we came down. Who gives a shit, right? Who gives a shit whether stocks go up or stocks go down? If you're a trader. Now, obviously, if you're an investor or a long-term swing trader, of course you want stocks to continue to go up. I understand that. You don't like seeing pullbacks. That's completely fine. That's reasonable and that's understandable. But if you're a trader, you simply and strictly day trade or maybe hold swings overnight. Why does it matter if the stocks are going up or going down? When you come across a beautiful trending day like we have today, why would you want to mess that up? Why would you want to go in the opposite direction? Think about that for a second. You really have to start to understand the psychological mindset every day that you enter into the market. If you are constantly thinking, as we're continuing to push up now $4.25 on the day and over 1% on the SPY, I'm telling you, I've seen dozens, and they're not even people that I follow on Twitter. I have a very small Twitter presence. I am not really, around on Twitter, but I like to get on there and I like to see what the overall sentiment is. I like to see what other people and other traders are saying, right? And half the time, these traders are wrong. Half the time, these traders are just throwing out opinions. Give me an actual pivot level based on technical analysis and based on some supply and demand, and then we can reason and then we can discuss. But when you just say that I want the market to go down because we're oversold, I think today feels like a put day when the market is up for 4 or 5 hours in a row consecutive without even testing its power trending SMA is absolutely insane. It's ludicrous and it makes no sense. It's going to kill your trading account. And if you follow people that say, I feel, I think, maybe, right? Why don't we? I hope. If you follow people who say that kind of nonsense, you are going to get destroyed along with them. The only reason that they are not getting destroyed on a day-to-day and month-to-month basis is because their account size is a lot larger than yours, and they can afford to take losing trades, battle back, come back, make the money back. I'm just being honest, okay? I'm just being honest. I trade with a group of guys, and I have friends who trade with multi-six-figure accounts, okay? Multi-six-figure accounts. Some of them have 7-figure accounts with leverage, okay? With leverage, with margin. Now, when you have that kind of trading capital, you can afford to be wrong. But if you have a $1,000 account, a $5,000 account, a $500 account, you cannot afford to guess. What you can afford to do is follow a system, follow a strategy, understand technical analysis, use a very tight stop loss, and compound small wins. $25 here, $50 here, $100 here. Take money, extract money out of the market, extract, take. If you have a a multi-six-figure trading account where you can afford to kind of dabble in, build an intraday book. If you don't understand what an intraday book is, get with me. I'll explain to you, but I don't have time to go into what an intraday book is. But if you can afford to hold multiple positions, let's say, for example, I'm just going to use an example. You're shorting small caps in the IWM. You're shorting some of those stocks because money is outflowing from small caps, outflowing from the IWM, but you're long technology. Makes sense. If you're long, Dow, you're long consumer staples, but then you're shorting energy or you're shorting utilities, makes sense, right? But if simply you just trade the SPY or you just trade a few stocks and names in the triple Qs, which is the NASDAQ 100, and you're talking about, I want to see the market go down, or I think we're going down, or it feels like it's a put type of day, makes no sense when the market is trending higher. It makes no sense when the market is trending higher. Now, the problem that I have is because let's say, for example, we play out today is the 13th, we roll into Friday. Let's say tomorrow, if we look at the SPY right now, up, 1%. If we look at the NASDAQ 100 futures, up 232 points on the session. Let's say tomorrow the market sells off 1-2%. Let's say tomorrow that the NASDAQ 100 is down 200 points. The first people to say, I told you so, are the same people who were trying to short the top in a trending day the day prior, who got their, blown out all day and or sat on their hands and made no money because they did not want to go with the trend. For some reason, they wanted to go against the trend, which makes absolutely no sense. But yet tomorrow when the market comes down, They're going to be praising like they're God's gift from heaven, right? So what I want to tell you is that it doesn't matter if the market is going higher today and the market drops tomorrow. Tomorrow's a new day. We're going to worry about that technical analysis and those technical levels tomorrow. Today, what we need to be doing is focusing and emphasizing on extracting money out of the market that the market is giving us on one hell of a day. So again, take time, start to journal, write down your emotions, write down your thought patterns. I want to understand, traders, what's going on inside the mind. For a long time, I told you guys that I've been trading for almost 8.5 years, almost 5.5 years full time, right? The first year was an absolute cluster, you know what, inside here. I couldn't get anything going. I'd have big wins, I'd give it all back in one day. I'd have, 2 weeks of green, I'd give it all back in one trading day. Okay. And then I got into a period of time where I was constantly trying to assume and guess and try to jump one step ahead of the market. That was like 1.5 years, 2 years into it. I was always trying to one up the market. It wasn't until I took my foot off the gas, I really focused in and honed in on the system and, left my personal emotions and personal bias at the door and kind of just followed technical analysis, used a technical stop loss, took profits when I should have taken profits, not gotten greedy. Sometimes in the first year to 2 years that I was trading, I'd be up, $300, $400, $500 on a trade, continue to hold it, thinking that it's just going to continue to ride higher. I'd give all the profits back. The next day I'd go on tilt, lose, double that. It wasn't until I understood that, hey, I have X amount of dollars in my trading account. If I can extract $200, $300 a day, that's a fantastic day. That's more money than someone makes on minimum wage nationwide, right? If you can pull $250, $350 out of the market each and every single day, not saying that it's going to happen each and every single day, but you kind of get my point. If you can take $200, $300, $400 out of the market and you're trading with anything less than 25,000, that's a hell of a day. That's a hell of a day. Continue to extract those profits because those $1,000 days will come. Continue to extract that $150, $180, $250 day because the big $2,000 day will come. But if you constantly think that you're going to take a $1,000 trading account and you're going to flip that in a week, you are crazy. I'm not saying that it has not been done before because it's been done hundreds and hundreds and hundreds, if not thousands of times. But that doesn't work 20 years from now. You're not going to constantly put $1,000 in and make $1,000 in a day. You're not going to constantly flip a $5,000 account into $25,000 in 3 months. It's just not going to happen. The way you make more money in this business is by having more leverage and having a bigger account size. It's not by trying to squeeze more points out of one particular trade. It's about going bigger on your size and tighter on your risk is how you make more money. I hope this video can resonate with you. I hope you guys can take a little something away from it. I hope you guys enjoyed it. But it's, again, just reading things on Twitter, I don't even want to update the comments, but like when people are saying that, when the market is screaming higher, it's screaming higher today. It is a bull trending day. And you have people, traders with big followings on Twitter saying, I feel like it's time to short the market. So let's look at the chart. If you would have shorted here, you got smoked. If you would have shorted here, you got smoked. If you would have shorted here, you got smoked. Hope you guys enjoyed the video. Make sure to like, comment, subscribe. If you guys want to trade with me, you guys want to learn how I trade, you guys want to get access to the personal Discord and community, you guys want to get access to funding with some of the best prop firms that I personally trade with myself, and you guys want one-on-one coaching, mindset coaching, and strategy building coaching, make sure to visit evolutiontraders.com. I'll see you guys all on the inside.